Hey everyone, and thanks for jumping back into the cryptoverse. This is a premium only video, so I hope you guys enjoy the content. Today we're going to be recapping the Bitcoin dominance. So if you go back and look, we covered this a few months ago. While some of the things that we cover on the premium list are these one-off type things, whether we're adding something to the risk dashboard or whatever it may be, other times there are topics that we do need to revisit throughout the market cycle because things change, right? And it's important to update the model, see where things are, and see what we can continue to expect. So, this chart here is the identical chart I showed you guys a few months ago, right? I think it was from the Quantitative Investor, like 1.12, if I'm not mistaken. But the general idea is it's showing the Bitcoin dominance, right? So this is the Bitcoin dominance on the y-axis. It goes from 0 to 1. It's been mostly between 0.8 to 1 for much of the last cycle until the very end of it. Okay, and that's when it dropped from around 0.87, 0.86 all the way down to around 30%. Now, this chart, as we know, is color coded based on whether Bitcoin is above or below its 20-week moving average. And one of the things we noted, right, during the last video, right, this is not up to date. During the last video, we showed on this, I think it was 2.5 months ago or so, we said we expect the dominance to go down, right? In the premium video that week, this is the line that I drew, okay? This is more or less, this is identically the line that I drew. I just grabbed the slide from the old presentation. And what we said was, well, the data would suggest, right, that the altcoin dominance will go up in the short term, that the Bitcoin dominance will drop. And the reason being is because Bitcoin, it was back into our kind of like this corridor that it has been in for a long time. And Bitcoin is above its 20-week moving average. Now, over here, Bitcoin was above its 20-week, but the dominance went up. But again, I would still argue we were still in our bubble territory. Even as late as as late as 2019, we were still in the bubble territory, essentially recovering from the bubble of 2017, 2018. We came back into the corridor and we said, okay, Bitcoin's above the 20-week moving average. If it holds it, right? If it holds it, or if it's as long as it stays above it, the altcoin dominance is probably going to go up. So this is the line that we drew. Now we're going to update it. We're going to add in about 2.5 months of data to bring us to the present day. So that's what actually happened. So as we've said before, all models are wrong. Some are useful. This was just a squiggly line that I drew, kind of showing you what I more or less think to happen. We came down quicker than this theoretical projection had us coming down, and we've actually gone down a little bit below it. Now again, this line here is an imaginary line. It doesn't really mean anything. You could shift it, right? This line was drawn and there were some data points below it, right? You could easily shift it down a little bit and try to continue with the general downtrend corridor, if you will. But the thing that you need to take away from this, right, is that I can't say exactly how far down the dominance is going to go, right? It could continue to go down a bit more, or it could turn around tomorrow. The thing that you need to recognize is that the Bitcoin dominance will likely go up again before going into more of a blow-off altcoin speculative bubble phase. And some of you are probably scratching your heads, right? Because you're looking at the altcoin dominance now and you're seeing all these coins just fly through the roof in terms of their ROI. Despite that, we're still not anywhere close to where we were in 2017, 2018. I should say here at the very beginning of 2018 is when the altcoin dominance just skyrocketed, right? We went from 65% down to 30% in a few weeks. Okay, we're still here. We're currently at just shy of 60%. So still a long way to go. Okay, and I would argue, right, that I can't say exactly right when this is going to start moving up, but when it does move up, it's going to catch a lot of people off guard, right? Because what's going to happen is people are going to be overexposed in too many altcoins, and Bitcoin's going to leave a lot of these coins behind when it makes a run to 20K. Now, right now, what's going on? Bitcoin it's staying like barely bullish, right? It's it's within 25% of the 20-week moving average. And because it's bullish but not overly bullish, it's giving other coins like Ethereum and a lot of altcoins room to breathe, right? Room to grow. And this is when altcoins and coins like Ethereum do their best. It's when Bitcoin is not bearish, right? When Bitcoin is still well above its 20-week moving average, but when it's not doing a whole lot itself, right? When it's basically just staying still or slowly moving up. If it's slowly moving up, then altcoins are still going to do great, right? What you want to be on the lookout for is when it starts picking up, when Bitcoin really starts picking up steam, and when it makes a run at 20K. And I'm not talking about going from like say 12,000 to 13,000. I'm talking about a quick move, right? From like 14K or 15K up to 20K in a few weeks. This is when the dominance of Bitcoin will likely, start increasing rapidly again, and until it gets to the prior all-time high. And now let me color code it based on whether Bitcoin is above or below its prior all-time high. So this one, as we showed, right, it's just color coding it based on whether it's above or below its 20-week moving average. Now, if you color code it based on whether Bitcoin is above its prior all-time high or below it, you can see that is when the dominance really started to fall once it got to the prior all-time high from last cycle. In 2016, in late 2015, it got above its 20-week moving average. In 2016, it held it as support. This is when the dominance fell, basically from the top to the bottom. And then it went back up as Bitcoin went back to its prior all-time high. And then once it got to its prior all-time high in early 2017, this is when the altcoin dominance increased drastically, causing the Bitcoin dominance to drop like a rock, right? It dropped like a rock in 2017. Then later in 2017, Bitcoin went on its last major run to 20K, and then following 20K, altcoins had a few weeks to shine again before everything came crashing down. So what I would argue is that we're in this stage, right? We're in this stage here, potentially, and this is bearing in mind that Bitcoin will hold the 20-week moving average. If it doesn't hold it, then I feel like to some degree we're just kicking the can down the road, and we're going to have to repeat a lot of this stuff, right? And this is why we say, you take profits during bubbles, because we don't know how long it's going to last, and if it does crash, well, at least you took profits, and then you can continue to DCA back in. So I would argue that this is the phase that we're in. It's not quite as steep. Remember, there's going to be decreased volatility. I don't think things are going to be quite as crazy as last time. It doesn't mean you can't make a lot of money. It just means that you need to know how to play the market in the most effective way based on what the data suggests. And it suggests that it's not going to be quite as crazy, right? So if we're still in this move, I don't know how far down we're going to go. I mean, we could go well below this line here, regardless of, the shift that to get it a little bit lower. We could go lower than this line. The point is, right, is that Bitcoin still has not made that run to its prior all-time high. And when it does, we're probably going to see the Bitcoin dominance go back up. And you can see that, from this point here, it did go back up, but it did not go back up to the point before it had held the 20-week as support. So it came down, it came back up, but the point that it came back up to was lower than the point that it had started at. So the point that we started at recently, right, was around this level here, maybe 67% or so. So I would anticipate the dominance not quite getting back up to that level if we hold the 20-week, and when Bitcoin makes that move to 20K, it probably won't quite make it to that point again, but you never know. But once it does get to that, that prior all-time high of 20K, a lot of times on the public channel I say, okay, wait till 20K. In reality, I think it would be wise to front run it a little bit, right? Because if you don't front run it, and there's a lot of people that are anticipating this to happen, then the market evolves, right? The market slightly evolves, and things can change as we continue on marching through the cycle, right? The market becomes more efficient, it becomes more mature. So I would say you need to be aware that if Bitcoin is at 18, 19K. Personally, I would probably start front running a little bit and looking at some of these coins that start really pumping once Bitcoin gets to the prior all-time high. The risk that you take associated with that is, well, what if it goes to 20K and then comes straight back down? And obviously that's an inherent risk. So this is why I would say, you just start slowly DCAing maybe into some of these coins that you want exposure to that previously we would not want any exposure to, right? Just because they don't tend to move until Bitcoin gets to the prior all-time high. Now, if we combine the colors, so now the green means it's above the 20-week, the red means it's below, the dark blue means it's above the prior all-time high, and the light blue means it's below the prior all-time high. So you can see, this move here was when Bitcoin, so first it got above the 20-week here, it went up a little bit, and then it came down, and then it went back up before Bitcoin got to the prior all-time high. Once it got to the all-time high, then it fell. Okay, so we're in the same window. So we're still in this window here, I would say. I don't know how far down it's going to go, right? But you can see it came down pretty far. And then at some point, it quickly turned around as Bitcoin moved to the prior all-time high. So maybe something that I would expect, right, would be for it to come down to some point, right? I don't know exactly where. And then to slowly move back up throughout 2021 as Bitcoin makes its way to 20K. This is what I would anticipate. If it's a little bit easier to think about it, right? I've talked about this being a bubble. If we invert it, talked about the altcoin dominance, you can see that bubble form, right? We have a peak here, a second peak. Maybe this is the major blow off top, the dead cat bounce, final capitulation, and then return to normal. So we're basically back in our, what you might consider, quote unquote normal phase where the altcoin dominance is kind of in this slow move up, not in bubble mode by any means yet. So with that said, that's the primary topic of the week, of course, right? Is looking at that kind of stuff. So what I want to talk about now, right, are the risk levels. So the risk level for Bitcoin and Ethereum is still less than 0.5. So I would say it's business as usual there in terms of DCAing based on a moderate risk strategy. The short-term bubble risk on Bitcoin is around 21%, meaning it's 21% above its 20-week moving average. So I would say business as usual. And it's when it's in this range, right? When it's in the business as usual range, this again is when coins like Ethereum are really going to shine. Is when it's within this business as usual range. When it starts getting into these ranges, this is when you want to be looking more so at Bitcoin rather than a lot of these other coins. But for now, I would say it's business as usual. I'm still fairly exposed on a lot of altcoins and coin, and Ethereum, of course. Basically because Bitcoin is still very bullish, but it's not overly bullish to the point that I would want to go, increase my Bitcoin exposure at the cost of reducing my expected return from various other coins, because I'm willing to take on those units of risk as long as Bitcoin is within this range. So Bitcoin and Ethereum, still business as usual here. Link, the risk is still relatively high. The USD risk is still 0.779. As many of you guys know, if you're in the alerts channel, I sold a decent amount of Link at 1850. I'm not looking to buy back in right now. With that said, of course, as I mentioned a week or two ago, you could always, if you're scared you're not going to have all your Link for the cycle, you could always buy back in, right, whenever you want to. But the point for me is the risk is just too high, and yeah, I recognize that if it goes up, then I potentially miss out on some gains. But that's just not how I operate, right? I just operate based on the risk metric and based on what looks risky, what doesn't. I'm potentially missing out on an expected return, but there's a lot of risk associated with that. I mean, in the same way that Link could go to $30 in a couple weeks, it could also be back down to $10 in a couple weeks. So there's a lot of risk associated with buying Link right now. So if you are getting into it, I would say just be careful, tread carefully. It could go up. And I still do have some Link. I would never sell all of it at this stage during the cycle. I would want to hold a decent amount of it till the end of the cycle. But recognize that, if Bitcoin were to do something like correct back down to the 20-week, a lot of these coins are going to erase some of their recent gains, okay? Now, ADA, it's less than 0.4, right? So it's theoretically in the buy regime for me. The thing is I'm still waiting for this ADA Ether risk to continue to drop, and I'm hoping if I didn't hold any ADA, I would start DCAing it right now personally. This is not financial advice, of course, but if I didn't hold any, I would start DCAing it just because it seems like the risk is less than 0.4 again. It's somewhat a tough pill to swallow given the fact that we had so long to purchase it, right, at 2 cents, 3 cents, and 4 cents, and this is where I got most of my ADA. I did buy some up to 8 or 9 cents though. So I did buy a lot of my ADA at those lower levels. So, purchasing at 11 cents just doesn't make a whole lot of sense to me in terms of USD. But if the Ethereum risk here continues to go down, and that doesn't mean that the USD valuation has to go down, maybe Ether just continues going up. If we see this drop down to like 0.25 or so, then I'm probably going to DCA some of the Ether back into ADA. And if you look at the ADA Ether chart, you can see that we had several of these times where, if you just look historically speaking, this was a lot of times the local bottom of ADA versus Ethereum. So this is why I say, if you don't own any, now could be a time to start DCAing, but recognizing that, there's still a good chance we come back into this region. And because I already hold a lot of ADA, and I'm more bullish on Ether regardless for the cycle and actually in the short term too, I'm going to wait and see if we come back into this region. If it comes back down to this blue line here, it's going to be a risk level of approximately 0.25 against Ether. So I'd probably start DCAing some Ether back into ADA once we get to this level, and then maybe continuing to do so if it continues to drop and stay within this range here. But what I'm really hoping for, right, is for Ethereum to continue this move. So if we look at, say, the one-day chart, I'm looking for Ethereum to continue, hopefully, this move here. Let's just hope Bitcoin stays bullish, right? And we'll stay business as usual. Ethereum versus Bitcoin, business as usual. Hopefully we'll see this speculative bubble form in the short term, or we can then come back down, maybe take some profits up here, and then reallocate them when it comes back down. We don't know if this is going to happen, right? I can't stress that enough. I don't know if a short-term bubble is going to happen, but I'm just saying, it would be nice from a data perspective, right, to see it move up, maybe in the next few months, and then to come back down in the fourth quarter of the year for a timely December buy again, right? A timely December buy because, as we've shown before, it's December. Buying in December has usually been a really good thing in the next 90 days against Bitcoin, right? So buying in December here and selling in March would have been, like a 1,500 to 2,000% gain, depending on what wick you're measuring it from. December in 2016 to the first quarter of 2017. Just looking at going into March, it would have been a 700% gain. Then in buying in December of 2017 and then selling in January of 2018, another 400% gain. Then going to November or December of 2018 to then the first quarter of 2019, we're looking at a 70% gain. And then we recognized this, and then in 2019 we said, I think there's a good chance that it's going to make another one of these moves, and then sure enough it did. It came down just in time for the December buy, and then we saw that 70% move in the first quarter against Bitcoin. So from that perspective, right, it would be nice to see this bubble form, which could give us a chance to take profits right along on the way up, and then if it does come back down in the fourth quarter, like a lot of times it does, its valuation against Bitcoin, then it might make room for yet another timely December buy. Let's say December buy. So then maybe going into 2021, we realize yet another nice ROI. But we recognize that it might not happen, of course, and it might not be as exciting. We recognize that in fact it could just slowly move up, right? And maybe the next December buy maybe just looks like a local dip in the market, and we continue on or something. So we'll follow it for sure, but as I've said before, be on the lookout for this potential Ethereum bubble forming. I do feel like the conditions are right. The only thing that needs to happen is Bitcoin either needs to stay where it is or slightly move up, right? Stay where it is or slightly move up. Anything other than that, you're probably not looking at an Ethereum Bitcoin bubble. Of course, you might see an Ethereum USD bubble, but that's a different topic, right? If you want to see an Ethereum Bitcoin bubble, we need Bitcoin, as we've said before, to stay in this range, right? Or to slowly move up, but not too quickly. We don't want it to move up too quickly. we don't want our Bitcoin short-term bubble risk going up too high. We would like it to stay as low as possible, again, to give Ethereum room to breathe. So that basically sums up Bitcoin, Ethereum, Link, and ADA. DOT, again, one of those ones. I think it's decent to hold for the market cycle. The risk is really high right now. Yeah, I mean, you could take profits. I did take a little bit of profits here on Polkadot, about 10%. Once it around $6, just to get out some of those profits. But for the rest of it, I think for the time being, I'm planning on just holding it for a while, staking it, letting it do its thing more or less, because there's no way to assign a risk tolerance to this. We don't really know what the volatility of it's going to be, and if it does something crazy like go to $100, then I would then great, right? And I would want to hold a lot of it. And it's still relatively, $5 or $6. The market cap, of course, is relatively high. It's number 6, right, on CoinGecko. So it is, I would say there's a lot of risk associated with buying it. Just like there was at $3, there's even more risk at $6. If it goes to $12, there's going to even be even more risk, right? So my philosophy on DOT is, as I've said for weeks now, it's going to play a role this market cycle. It's something that has a lot of risk associated with it, right? So, there's a ton of risk associated with a coin, with the Polkadot ecosystem, because it's so new and we really don't know kind of like what's going to happen within crypto, like how it's going to evolve. Are people going to start using it? It also depends on like Ethereum 2.0 and all this other stuff. It does have a mountain to climb, but as I've said all along, I do think it has a role to play this market cycle. So this is why I hold some, and I'll probably pick some up, right, at key times during the cycle, depending on what the risk levels are, right? If we see the Ethereum risk going to like 0.6, 0.65, 0.7, it could present like timely opportunities to move it into Polkadot if at the time Polkadot has retraced or something, right? So again, if you don't own any and you're looking to get some exposure, I think your best friend, right, is just to DCA it. DCA it, and if the price goes down in the short term, great, because it doesn't change our perspective for the next 2 to 3 years. This is my thinking. With XRP, this is XRP and Litecoin again are the two coins that I would say I really don't know if I'm going to buy Litecoin again. But with XRP, I think there is a reason to keep it on the radar, especially as Bitcoin gets closer to its all-time high. So if we see it drop back down into back down here, I would start DCAing some XRP again. So what I'm looking for is I'm looking for it to lose approximately 50% of its valuation against Bitcoin from here. If it doesn't do it, then fine. I miss out on that move. If it does it, then I think that my risk tolerance will be satisfied buying XRP at a price that's 50% valuation from where it currently is. So if you see that happen, and remember, as we've said before, in the last cycle, it was early 2016 when Bitcoin had been above its 20-week for a while and was holding it as support, that XRP did see a nice move, right? And we called this too. We said, this is 70% up. Said, okay, well, same thing, right? The XRP, Litecoin, they're going to move with the market. If Bitcoin, the market's doing well, it's probably going to go up. And it did. It went up 43%, and then the first sign of weakness from Bitcoin, the first retracement, XRP retraced a lot harder in the short term. So, things like Ethereum, yeah, they retrace, but they're still pretty far up, right? I showed this the other day. If you take a measured move from, say, like October of 2019 to where the ratio currently is, Ethereum Bitcoin is up 60%. If you look at XRP Bitcoin since October of 2019, right, it's down, it's down 35% or so. So there's a huge opportunity cost to holding XRP, right? You say, I hear a lot of people say, oh, it's for diversification. Yeah, but I feel like the data suggests that just holding it is just during a bear market when Bitcoin is below, say, its all-time high, it's just a terrible idea if you're valuing it in terms of your Bitcoin. If you're valuing it in terms of just USD, it's still not a great idea, right? It still doesn't do so well against USD. But Bitcoin, it certainly is going to bleed against, I think. So again, holding off on XRP, I would like to see Bitcoin continue to climb for a while before I would consider that. Monero, this is one of the ones that we said a few weeks ago or a week or two ago. It seems like maybe it's forming one of these nice accumulation regions, right? Just like ADA Bitcoin did, like that you can see here. Sorry for the drawing, it was from a live stream. Kind of just a cheeky drawing. But you can see that accumulation range of ADA Bitcoin. So then looking at XMR Bitcoin, kind of observing the same thing, and also recognizing, right, that Monero USD started making its major move later in the cycle than Ethereum did last time. So if it repeats, right, and you see privacy coins, the fungibility narrative continue, that means the coins aren't tainted, right? You can't like trace them back to nefarious things, so they're all treated equally. Then maybe we're going to see XMR break out here, right, against Bitcoin. So this is what I'm looking for. I don't know if it's going to happen in the short term. Maybe it'll take a bit longer. Maybe we come back down and then go up. But I do think that sometime over the next 6 to 12 months, XMR will break out against Bitcoin. And then looking at the USD chart, right, it's still held up fairly well. A lot of coins, when we first mentioned XMR a week or two ago, I think it was like $93. And then now it's at 96. A lot of coins lost their value from a couple weeks ago. At least XMR it's actually staying fairly strong considering how far, considering the fact that Bitcoin dropped down to, like 11.2, 11.3, 11.2. It actually recovered quite quickly, a lot quicker than a lot of other coins have. So I would say definitely, XMR is one of those ones to continue to keep an eye on. And then of course these are some other coins that I just don't really want to put risk metrics on here officially yet, just because I don't think there's enough data to at all make them worthwhile. Now, the other thing I want to remind you of, right, is the S&P 500, because if we see this risk level get to 0.8, it's really not. It's probably not going to stay above 0.8 for a long time. We looked at a chart in the alerts channel. I don't have it handy, but you should check out the alerts channel if you're not in it. On Telegram, just message me and you can get in there. But looking, the amount of time spent above 0.8, not 0.8 to 1 risk is a really low percentage of the time for the S&P 500. So for now, I think it's still business as usual. But if we see this go above 0.8, then I think it's time to start being really skeptical about how much higher this can theoretically go. With that said, I mean, it's been in the 0.9 risk regime before as well, right? I mean, just because we hit 0.8 doesn't mean it's going to stop going up. It just means that, okay, the risk is getting high, therefore you might want to mitigate some of that risk. So you can see the 0.8 level is somewhere between $3,500 to $3,600 for the S&P, and right now it's at 3508. So if it makes it up to 3600, we will be in the 0.8 risk regime. 3800 would be the 0.9 risk regime, and 4000 would be 1. And remember, these are dynamic, so if it takes us a few months to get there, these will slowly shift up, right, which is the idea. Slowly shift up, and of course, you have to consider the fact that with the Fed printing all this money, it makes you wonder, right, a lot of this could just be going up because the USD is just losing valuation against, I mean, if you look at the dollar currency index, it's been losing value for a few months. You look at it against the euro, you can see it. So recognize that we might be in the beginning stages of significant inflation, and if that's the case, then a lot of things are going to be artificially propped up because the value of the U.S. dollar has dropped significantly. And this is one of those things we've looked at in the past. Remember, Bitcoin tends to not do so well if the US dollar is gaining a lot of value that day. So if USD is going up in a single day, a lot of times Bitcoin is not going up or it's going down. If USD isn't doing so well, Bitcoin's going up. It's not just the narrative, right, of don't trust that monetary system, but it's also the fact that just numerically speaking, the U.S. dollars are worth less. Therefore, it's going to take more of them to purchase a full Bitcoin. I think a lot of people think of USD, especially Americans, because I am one. I can say it. For a long time, I just thought of this. You think of USD, you recognize there's inflation, but you really don't think about it too much of a dynamic thing, right? But if you live in Europe, or you're more accustomed to trading, right, in the United States or wherever you live, then you probably are used to these the forex markets, right, and looking at USD Euro and the US dollar currency index. And it does make a big difference, right? The value of the US dollar makes a big difference when identifying how markets are doing. So again, I would say with the S&P 500, it's still theoretically just business as usual. We're still less than 0.8. I'm leaving the money in for now. I don't really have a reason to pull it out. It's not like I want to put it anywhere else. I don't want to put it into real estate right now because I'm worried that with the mortgage forbearance programs, coming to an end, people actually having to pay their mortgages, commercial real estate defaulting, right, because they can't pay it. I just think there's going to be a huge supply of real estate. I don't think it's going to crash in 2020, but sometime in 2021, maybe even 2022, I think that there's a lot of these prices are going to come down because the supply is going to be on the market, right? The prices have, I think, gone up recently, or not dropped too badly because people just aren't having to sell because they don't have to pay their mortgage. But at some point, right, it's the bill is going to come due, and they're just not going to be able to afford it. People are not going to be able to bounce back from the coronavirus, right? It's sad that these businesses are going to close, but it's just the way it works. So what I'm looking for, right, is I would put it into real estate if it seemed like a better time for real estate. Unfortunately, I don't think it's a super great time. The interest rates are low. But personally, the interest rates I think would stay low if you look at like say past times, right, when it dropped. The interest rates will theoretically stay low, or they've historically stayed low for a few years before going back up significantly. So the general plan that I have, right, is I have a lot of equities, I have a lot of cryptocurrency, hoping that the expected ROI on crypto is a lot higher than equities. But hopefully that there's a timely transition, right, of DCing out of crypto during this cycle and into some real estate, right, and maybe even into obviously into like index funds, mutual funds, like preserving that wealth that you've worked so hard to build, right? You don't want to build all this wealth and then like you don't want to make $1 million and then go gamble it on some random altcoin, right? Once you make the money, make sure you preserve it, make sure you hold on to it. And then once you've kind of gotten accustomed to the new normal, then try to make strategic decisions. Okay, how can you most effectively grow it from here? But like, let's say you're used to living with like $100,000 in your account, and then all of a sudden one day you have $1 million. You might just think of like $500,000 of that as like the house's money, and like you're just gonna go gamble it in the hopes that you can turn it into like $10 million. But remember, like, this is not a smart way to go about it. Like, if you see this happening, like, maybe just move it into less risky investments for a while whenever that does occur during the cycle. Get accustomed to the new normal so you don't think of it as like the house's money anymore. And then from there, this is your new life, right? This is your new normal. Then from there, start investing it in a way that makes sense, and you're not just FOMOing it on ridiculous stuff, okay? So preserve it, right? Altcoins are all fun and games. These microcaps are fun and games until they're not. And when it's not, things get ugly, and I just don't want you guys to be caught on the bad side of that, right? I don't want you to be caught on the ugly side. I want you to be prudent about taking profits when things move up systematically, recognizing that we don't know where the top is. Yeah, if you just hold it and you never sell any, maybe you would have had more. But then the question is like, let's say Bitcoin does something like this, and then it comes down in the short term. Yeah, hindsight. Yeah, let's sell it all up here. But in actuality, we don't know where it's going to go, right? We don't know how high it's going to go. For all we know, it could come up here and then come down, or maybe it just moves sideways for a while, then goes up and then comes down. We don't know. So this is why you admit that you don't know, and you just systematically take profits again on the way up. And remember, there's always another trade tomorrow. Don't let the FOMO get to you, right? You made an investment, you took on the risk, you saw a nice ROI, you took some profits, and then you'll reallocate those profits into your dynamic DCA strategy for other cryptos, right? So if you're moving out of one crypto, maybe you then move into another, or you're moving into safer things, like maybe you're moving into mutual funds, which maybe aren't even that safe considering how propped up that market is right now. Or you're moving into precious metals, right? You're moving into gold, silver, palladium, platinum. Maybe you're moving into real estate because you want to buy a house for your family, right? So there's times, right, where you don't necessarily immediately DCA back in. I was talking to some people in a chat group recently about this, right? Right now, a lot of these levels are around 0.5. You know, the risk levels are around 0.5. So the idea, a lot of people are, you know, they're selling it when it gets to 0.5, or they're selling it when it gets to like 0.51 or something, and then they're buying back in when it drops to like 0.47. I know a few guys have been doing this and they've been able to accumulate. But remember, when the risk is like 0.7, you're not going to then be accumulating. Well, I wouldn't be. I don't really care what you do. Well, I do care, but it's just like I can't keep you from doing stuff that to me would not make sense. If you're selling at say 0.7 and then it drops to 0.68, like I would not then buy back in because the risk is still high. So think of the 0.5 risk regime as kind of like practice. Are we talking about practice? We're talking about practice. This is talking about practice, right? So you have to think of it right in terms of you know, going through the motions now, right? So that later on, when real money is on the line, you don't squander the opportunity. So make it kind of a muscle memory thing. This is my advice. It's not financial advice, but this is just what I would do. And again, you know, if you don't like the idea of flipping constantly, you can just stop buying at 0.5, and then maybe you just don't even start selling until a 0.6 risk or 0.7, which maybe also helps in terms of like tax purposes as well, depending on what country you live in, depending on your income bracket, and depending on whether you've been holding it for short term or long term, which would indicate your potential capital gains taxes. So again, the tax stuff is a complicated situation. It's hard to address it, generally speaking, just because it varies so much from person to person. But just be cognizant of that fact, and be aware too, right, that if you do see a lot of returns at the end of 1 year, and then you go gambling a lot of this money on random altcoins, you need to be able to cover your tax burden, right? Don't let what happened to a lot of people in 2017 and 2018 happen to you, where they made a lot of money on Bitcoin in late 2017, they then gambled it on altcoins in 2018, and then April came, and then they couldn't pay their 2017 taxes because they had blown it all gambling on altcoins. So don't let this happen. Be responsible, right? You want to make a better life for you and your family, or whoever it is, right? So act responsibly. Think of things in terms of risk-adjusted returns, not just the return. For every return that you get, you take on a unit of risk. So remember that. We're obviously going to follow Bitcoin, still doing fairly well, 11.6. As we said, as long as this happens, Ethereum is going to break 400, which it did, right? I mean, we published a video maybe 2 or 3 days ago when Ethereum was at 386, and I said, right, every time it crosses 400, it seems like the Bitcoin valuation has dropped, right? The first time Ethereum crossed 400, Bitcoin was at 12K. The second time it was at like 11.8. The third time it was at 11.6, right? Or the fourth time it was at 11.5. So every time it passes 400, the Bitcoin valuation is going down. So, right, it's a systematic shift of the Ethereum Bitcoin valuation. This is going to keep happening. I think this is going to keep happening as long as Bitcoin continues to stay in this realm. Of course, you know, Ethereum, if you see Ethereum continue to move up like this, you know, continue to stay bullish, maybe you see it move to 430, 440, 450, Bitcoin's probably going to come back up too. Bitcoin will probably come back up to 12K. So look out for that if you see Ethereum continuing this breakout. So I think that'll wrap it up. I hope you guys enjoyed it. The topic was dominance, the Bitcoin dominance. I hope it was useful to see an update on that, to kind of realize where we are in the cycle. Yeah, we could still have a little bit of a ways to go in terms of pushing altcoin dominance higher, but recognize where we are in the cycle, and that there's still going to likely be a phase that's going to last several months where the Bitcoin dominance goes up in its route to 20K. So I hope you guys enjoyed it. Let me know what you guys think in the comments section, and I'll see you guys next week. Bye.